All right, welcome back to QuickBooks. Today is the last chapter, chapter 14, which is going to be the adjustments and at the year-end procedures. Okay, so now in this chapter, we're going to be talking about what an accounting cycle does or what an accounting period is, okay? Because it's important that you do understand this because this is governed by GAAP, okay? An accounting cycle is where you schedule to complete the accounting cycle, right, in a timely manner, right? Whether you do it at the end of the month, at the end of the quarter, at the end of the year, it's up to you because GAAP allows you to break it into any kind of meaningful way so you're able to measure your profitabilities, right? So most common ones that you normally see for any typical kind of company is you see it done at the every month, okay? And you can also see other ones that do it every quarter, and then they do their annual financial reports at the end of the year. Whichever one makes sense for you to do, right? If you're a smaller company, yes, you can get away with doing an annual report or to close up the accounting period at the end of the year. But if you're a major corporation such as Walmart, you should actually do it either by the end of the week and most likely at the end of the month, because think about it. You have a billion transactions that you have to plug in, and you have a billion transactions that could affect your business, right? How would you be able to tell profitability? And that's why those major corporations pay the big guys, right? If you guys know what the major four accounting firms there are, okay? The more popular ones is Deloitte, right? And then another one is Ernst and Young, okay? So those are the one of the four of they call it the big four accounting firms, and they take on large projects for corporations, right? They are in the works of a for publicly traded companies, right? They serve these major corporations to help them out to be able to manage all their transactions. So that is what we're going to be doing is what are these standard procedures that must be completed at the end of the accounting cycle. Okay, so in this case, right, if you're going to be following along with me, you need to be opening adjustments 21, okay, for this chapter here. All right, so this is, yes.
You've said accounting cycle and accounting period. Are they the same thing, just interchangeable?
No, the accounting period, right, is a time frame, right? The accounting cycle is when you schedule to complete the
Okay.
accounting cycle. That's part of the accounting period.
So then what is the accounting period?
The accounting period is where you can choose whether you want to do it the time frame between every month, every week, every quarter, right? As long as it's 12 consecutive months for you to demonstrate profitability, to measure profitability, right? It's a time frame. Okay? The cycle is where you have to go through a set of standard procedures such as,
Okay.
yeah, to in
Okay, so the cycle is the steps and procedures. The
correct.
period is the time frame that you do it in.
Correct.
Okay, thank you.
Yes. So they're not interchangeable. However, that's exactly how we differentiated the two. Is one of them is a length of time. The other one is an actual step and procedures that we have to complete within that time frame. And you can choose because the accounting period, they allow you to break it into, as long as it's 12 consecutive, right? It has to be one whole year, right? Doesn't matter whether you use it as a calendar year or a fiscal year, right? Calendar year is going to be January 1st all the way to December 31st, where a fiscal year, right? For example, any government agencies, their fiscal year starts July 1st and ends June 30th of the following year, right? As long as it's 12 consecutive months. Because again, what happens at the end of an accounting year?
That's when you put your financials out.
That's one, you have to put your financials out, but two, that's how you file your taxes.
Right.
All right? So that's why the time frame, the maximum you can do, it has to be, or sorry, minimum has to be at least 12 consecutive months. Now, can you do reports that are 5 years? You can, if that's a way that, if you're a small business and you want to measure by chunks of years at one time, that's completely fine too. That is allowed, but just remember every year at the end of the year you have to file taxes. So you're gonna have to file your reports and do all these procedures, right? So you can file your taxes properly, because these are the adjustments that you must make in order for you to help you finalize your tax papers. Okay, so making adjustments to your inventory, making adjustments to your assets, making any adjustments to things, non-cash transactions, which we'll talk about, such as depreciation, right? We'll talk all about that in a few minutes. But at the end of the day, your time frame has to be at least within 12 consecutive months. If you want to break it up between every single month or every single week, so 52 weeks, then go ahead and be my guest, because that's what GAAP allows you to do. As long as you're cutting the whole entire 12 consecutive years in a meaningful way to help you measure profitability. That's it. Period. Okay? That's the goal, because we want to see the progress of our business. Now, here's a little fun fact. If you are a sole owner of a business, right? Not a corporation, not an LLC, or a partnership might fall under the same category as well. But if you are one of those two, a very, very small business, if you do not make a profit within 5 years of doing business, you must make at least profit 3 out of the 5 years, or else the government is going to deem your company as a hobby. Okay? That is a rule of thumb here, and that's why anybody that decides to go into business, they don't realize what the circumstances and what are the consequences, because if you don't meet those profits 3 out of those 5 years that you're given, the government's going to revoke your business license and call you a hobby. Okay? And that is where you're not going to get all the tax benefits that you would get as being a sole proprietor, right? Because that is the rule. Because anybody could say, I'm my own business, right? Oh, what are you in the business of? Well, I can make up my business to be whatever I'd like, right? So I can get a tax break. No, 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 no. The government has their ways around them to make sure that if you do go into business, you must meet that criteria, or else they'll deem you as a hobby. Yes.
Okay, then if they deem you as a hobby
Mm-hmm.
at the end of the 5 years,
Uh-huh.
do they audit the deductions that you have put down for the 5 years before?
I'm not a tax accountant. I cannot be able to answer that question, but I am. Uh, I'm pretty sure it's after the 5 years. So after they say, okay, well, looking at your records, you haven't made any profits. You took loss after loss after loss after loss. Then what is your business? Your business doesn't seem like it's picking up. You're not doing anything to improve your business to make profit, because at the end of the day, right? More profits, more taxes. So
Right.
if you're all constantly taking a bunch of losses, right, which the government does forgive you for, okay? So when you take a loss, that becomes a deduction to you off of your taxes. Now, again, the government is only going to be giving you, that nice, discount every once in a while, but they're not going to constantly do that forever for the rest of the company's life. So once they deem that you are become a hobby because they look at your records, then they'll anytime going after beyond that, if you can go ahead and try to prove yourself that you can make a profit, then they can flip the switch and be like, okay, now you're a business. But for now, you're going to be taxed at as a hobby, right? And a hobby is kind of like a nonprofit organization where you're not you're doing it out of the own sake of your own enjoyment. You're not doing it to make money. Okay.
Okay, thank you.
Mm-hmm. So yes, so that is one criteria you do need to know when you're going to go into business, because again, these are the standard procedures you must follow in order to open up your business, and you want to keep track of everything that you do. Okay, and this is the key: is what happens when you reach that accounting period. What are the standard procedures that you must complete in order to help you finalize your paperwork to prepare your taxes so you can go through the IRS and go through the whole process to pay your taxes and so on and so forth. Okay? So in this case, right, I'm going to be introducing you to general journal entries. So we finally get to see what a general journal entry does. Now, in this case, right, from chapter 12. Chapter 12, a general journal entry is crucial for putting in opening balances. Okay, so if you guys have done and read chapter 12, right, they told you in order for you to set up your accounts with opening balances, you must enter in a general journal with the appropriate trial balance, so then you're able to continue your business as you were previously. But that's only if the condition is that is only if you are a pre-existing company that's just transferring to QuickBooks to make it easier for you to manage your books. In this case, right, if you are no, if you don't if you're a brand spanking new business, you won't need to have a journal. It's unnecessary because you wouldn't have any account balances. Now again, that is one of the reasons that you would use a general journal. But a general journal is 100% used for adjustments, okay? You only use general journals if necessary for adjustments, okay? You would never ever use a general journal entry for a regular transaction, right? Because the purpose of the general journal, right, is that if you can enter in a bill, then there's no purpose for you to have to know that a bill means accounts payable and some kind of expense. So when you're looking at a journal, you need to know how a debit and or a credit affects a specific account, because that's how you're going to know how to enter in a general journal. But if you don't know any relationships or any of that, then you are better off just entering in a bill, because at least that's straightforward, right? All you have to do is enter all the information that you see on the bill and click save and close. And what it does is behind the scenes, it enters in a invisible general journal, which affects all the accounts and does the accounting behind the scene. So that's why it's very important. Now, can you do the whole thing using a general journal? Yes, you can. Knock yourself out. But in this case, right, it defeats the purpose of why QuickBooks is even a program. Okay? For those of you who are going into my accounting program, we are going to be getting very comfortable and friendly with the general journal, because I'm going to be showing you and teaching you how to do a manual bookkeeping system by using a general journal where you're debiting accounts and you're crediting your accounts. Okay? Now, this whole section, right, is actually dedicated for the general accountant and the tax accountant, right? Anybody else that's in the position of this will not be anywhere near this, okay? The adjustments are meant for just the accountant, because the accountant is gonna know how a business transaction flows and knows the rules between the debits and credits. So again, general journals are strictly meant for just the accountants, because they know what to do when it comes to journalizing and how to use the debits and credit system. Where a sales representative, they don't need to know anything except for, I made a sale, you sold to this customer, this is what I sold. Okay? They don't need to know the accounting behind the scenes. So that's why this program is not meant, it is an accounting program, but it's primarily geared towards tax accountants because of the idea that by entering all this information, you can pull and extract to file taxes a lot more easier. And you do not need an accounting background to be able to use QuickBooks. You would only need the accounting background to be able to do the adjustments, yes. And then, of course, setting up the chart accounts and setting up the QuickBooks file itself. Okay? So let's keep going on. So here is what a general journal can do. So for any reasons that you need to make adjustments or make some minor changes, for example, right? If I need to recategorize some transactions based on class, because maybe I categorized them in the wrong class, I can also use it to categorize between accounts. Okay? I can also use anything, for example, any non-cash transactions, which is going to be an example would be bad debt expense, okay, is a non-cash transaction. Also depreciation, right? What is depreciation? Well, we'll talk about that in this. There's a huge chunk for depreciation, and we'll talk about what it does and what it is, okay? And of course, it also allows you to record any cash expenses if you need to transfer from one account to another. And then last but not least, to also, if you're a sole proprietor, also distribute the profits, whether you're going to pocket them or reinvest it into the company, right? Which we call that equity. Okay? So those are the primary ones that the book teaches you what you could do with a general journal, but you can pretty much do general journals for almost anything, any transaction that exists in the books. But that would defeat the purpose of why QuickBooks was made this way, because why spend all your time just doing journals when you can use the maximum functionalities of each feature, right? Entering a bill, entering a sales receipt, right? Recording your deposits, right? All of those essentially are general journals that you're creating behind the scenes. Okay? So let's take a look at our first example of recategorizing classes, okay? So let's go ahead and enter in and create our very first general journal entry. So, right, only place you can find it, and one and only, is going to go up to the company menu, and then you're going to locate, enter, or make general journal entry. That's the only way. You don't have it anywhere else, okay? Okay, so once I click on that, then I end up coming to this window, and it says, oh, that you're adjusting in the period. Okay, you're just gonna be like, okay. Now for this, QuickBooks also recommends that before even starting your general journal, where would you use, what place would you be able to locate these general journals when you make those adjustments? Because let's say you make a mistake, right? How can I adjust my general journal entry? I don't have a location to place it in. Well, that's why they do recommend you that what you're going to be using is you're going to be creating an account called General Journals, okay, or journal entries, whatever you want to call it, right? And it's typically a bank account, okay? Now, in this case, it is actually created for you automatically when you start up your chart of accounts. Some have it, some don't. And if you don't have it, then you would just have to create another bank account for the general journal entries, okay? Why is it a bank account, okay? If you really think about it, right, when we use the debit and credit systems, what we're actually doing is we're transferring money from one account and depositing it into another account. So in this case, it's kind of more or less like an actual transaction. However, at the end of the day, right, your debits must equal your credits. That's the number one rule when journalizing. Because in this case, right, what we're creating here is basically a 0 to 0 transaction, meaning if I put $50 in one account, that means I got to take $50 away from another account. And that's the idea of a general journal, is you're transferring from one account to another. Now, in this case, I do have it right here, general journal entries. And you're able to use this even if you want to use a write a checks window. Yes, you can use that too. However, make sure you understand what you're doing before utilizing this journal's bank account. Okay? Now, again, that doesn't mean if I double click on my journal entries that I can go ahead and be able to enter in. I can enter it in through a register, but the idea is you're not going to get that same format unless you actually double click on the actual transaction. Then it will take you to the journal. But this is to go into a transaction that's already pre-existing. If you're talking about starting a brand new journal from scratch, the only place that you're able to do that is through the company menu bar and make that journal entry. Okay, only way to create a brand new journal is through this way. So there you go. I'm going to go ahead and do it again. All right, and this time, let's see, we are going to be practicing how to categorize between accounts. Okay, so the first one, straightforward. If you have an account that you forgot to put a class on, that's also easy too, because right, if you locate the account, right, all you got to do is just change the class on it. That's pretty straightforward. You can be able to do that just going through the transaction itself. It's not necessary for you to have to go through a general journal entry to make that adjustment. So in this case, I'm gonna go skip that one and go straight into the accounts. All right, so for instance, this one I'm going to be doing for January 31st, okay, of this year, right, not last year, okay, January 31st of 2022. What kind of reference number would you like to have this? You can create whatever you want. I typically like to say, like, it's a general journal, right? You could put the year 2022-1. It doesn't matter what you want to do. You can put whatever you like, but I feel like General Journal 1 works the best, okay? At least you know this transaction is your first General Journal that you're creating as of January 31st of 2022, okay? Now, in this case, right, first thing you got to do is, because we need a place to locate my journals, right, the first thing I'm going to recognize is my journal entries. Okay, my journal entries bank account, right? In this case, what does this act as? It's gonna place this transaction in the general journal entries bank account, and that's it, right? You're not gonna put any debit or credit on there. So yes, that's just a way so we can be able to recognize it. Now, what happens if you don't have a general journal entries bank account? What happens is, at the very bottom of your chart of accounts, under the list of non-posting transactions, your journals will be there. But again, a better way to locate all of this would be at the very top of your windows under the journal entries bank account. Okay, so I label that first, and then the next thing I'm going to do is I'm going to have a debit into utilities, and then I'm going to credit rent expense. So maybe, let's say for instance, right, I paid for rent, but what happens is I end up overpaying rent, because at the end of the day, a portion of that money is actually supposed to go to utilities. So if you think of it that way, right, I put too much money into my rent expense, and I need to place a portion of that money into utilities. So in this case now, for journals, you can do whatever you like, okay? In accounting, it's very specific, because if you're manually writing everything, you want to make it look a certain way so you're able to recognize it. In QuickBooks, they don't care. They don't care if your debits came first. They don't care if your debits came last. They don't care about indentations or anything. All they care is about you're able to list out all the accounts and make sure that you appropriately assign either whether it's a debit or a credit. That's all they care about. So in this case, I just want to make sure that we understand this, right? I put too much money in my rent expense account. Okay? So that's what I'm going to do. Rent expense. I put too much money in my rent expense because I made a payment to rent, which a portion of the money is actually supposed to go to utilities. So in this case, right, because when I made my original transaction, I said that I paid for the entire rent, when actually a portion of that money paid to rent and the other portion of that money actually paid to utilities. So in this case, I need to make an adjustment because now I need to put a portion of the money that I put all into rent and designate it to utilities. So in this case, right, I am going to put in $25.62, okay, for the utilities. Okay, so 25 and 62 cents. Now watch this, 25.62. If I go ahead and tap into my credit column, right, nothing happens, right? But let's say I accidentally did this. I actually did a typo and put $28.62. Watch this, okay? The minute I move away, it automatically says, hey, I'm missing a debit for $3. So in this case, right, this is a preventative measure for you because rule of thumb about general journal entries is for every debit that you put in, you must have an equal and opposite credit. So applied science is also in this as well, right? Every action has an equal and opposite reaction, right? So in this case, every debit is going to have an equal and opposite credit. Whether it is split into multiple accounts or whether it is all in one account, right? So I can have multiple accounts if I'd like, as long as the rule stays true, that your total debits equal your total credits. In this case, it will stop you and start piecing together saying, okay, well, you are missing $3 somewhere. It will not let you enter this transaction at all because it is uneven. Okay? So therefore, I need to fix this. So I made the typo here in my rent expense. It's supposed to be $25.62. Now, of course, what happens is now you're missing another $3 here. I can go ahead and just clear those out, okay? Because in this case, I'm not going to add any account. It's going to be 0, which there's no account assigned. So in this case, this doesn't really affect anything as long as it's 0, 0 on both sides or equal to each other, okay? So then again, it's going to ask you what is the memo here. And we said it's going to be recategorizing expenses. Okay. I'm going to copy and paste this to save some time here. All right. Okay. Any names? No names. Is it billable to anybody? And is it designated by class? So did I make a payment to San Jose location? It doesn't matter at this point. If you want to, I can say, yes, this was for the San Jose location. Okay? So once you fill the journal out, right, and everything is equal, right, your debits is equal to your credits, right? I paid too much money to my rent expense because the rent expense included a portion to my utilities. Now, how we understand this is an expense is always going to be increased by a debit, and it's going to decrease by a credit. So in this case, I am subtracting out money from my rent expense, and I am debiting, which is I'm increasing another expense, which is called the utilities expense. So that's how we understand the flow of transaction here. You can also, once everything looks good, so down below it says your total credits is $25.62 and your total debits is $25.62. Then we can go ahead and save and close. Okay? And then now, since I'm in my journal entries, right, I'm able to locate it by going here, right here, journal -1. And if for any reasons I need to make changes to it, I just double click on it and it will pop up the journal entry for you. Okay? Any questions about using the general journal entry?
Not yet.
Okay? So again, there's a lot of rules, especially understanding the flow of transactions. So again, for those who have the accounting background, this is where you can make the rules up yourself and manipulate QuickBooks the way that you want to. Because if you know how the journal works, that's your powerful knowledge that you can override QuickBooks however you like. Okay? So in this case, now notice this. Every time I make a journal entry, right? So let's take a look at this. Every time I make a journal entry, it only allows me to use accounts only. Do you see this? It says account. So that means anything that is not an item is allowed to be here. So basically only accounts. Okay? That's the same rules as it is in the regular accounting, where we're going to rely heavily on the chart of accounts to be able to distribute the debits and credits that we need, right? Now, what happens if I miscategorize an item? I accidentally said someone bought this item instead of that item. Unfortunately, you won't be able to use the general journals. You would actually have to use what's called a $0 check, okay? So the journal entries is not going to work, okay? Because it doesn't allow you to have the options to switch from an account to items, okay? However, a $0 check can do it. So for instance, right, I'm going to go ahead and click on write a checks. So this is how I actually initiate the $0 check, because here I'm going to go ahead and create this as a $0 check, meaning at the end of the day, you're transferring money from one item to another. Okay, so in this case, I need to refer this to as my journal entries bank account. Okay, because in this case, remember, this is a non-cash transaction because I'm not really spending money, right? I'm not spending money to transfer from one account to another or one item to another, right? It's a $0 check for a reason, because the balance at the end of the day is going to be zero. So then again, it says, did you know that you can set up, now in this case, we don't want to ever set this up, because you want to make sure that your default settings is always your checking account, not journal entries, because that's what this is asking you. It's saying, did you know that you can set it up so then every time you write a new check, it's going to be a journal entry? No. Okay. So I'm going to say, don't display this ever again. Okay. So here, the number here is going to be your reference number. So in this case, this would be my general journal number 2. Okay? Why? Because in this case, it's not a check I'm actually writing, right? And this is the number I'm going to code to let me know this is my second transaction. Okay? Now, in this case, it tells me what the date is. It's going to be January 31st, and right now it is 0. Now, who am I going to be writing this check out to? Now, in this case, they do say that you're going to write this check out to inventory adjustment. So we're going to quick add that. So in this case, inventory adjustment. Okay? We don't have a person that's named that. That's okay, because this is an adjustment entry, right? So if I go ahead and click tab, it will tell me I'm going to quick add them. So I don't have to set them up. right? What are they? Are they a vendor, customer, employee, or other name? Now, in this case, because this isn't really a customer, you want to refer this as an other name, okay? Because they don't belong on a vendor's list, right? It's you're doing a internal transaction, right? You're transferring from one inventory account to another. So in this case, this doesn't involve a vendor, this doesn't involve a customer, and this definitely does not involve an employee. It just belongs on an other names list. So I say okay. So there you go. I have inventory adjustment payee. Now, how am I going to make my adjustments? So in this case, right, you're also allowed to mix between expenses and your items, because here, when we get the ability to be able to utilize either or, you can mix and match. If you're not just strictly moving from one item to another, you can actually combine the two, okay? So for instance, right, they tell you for your expense account, they want you to put it as cost of goods sold. Okay, so in this case, we have a cost of goods sold here, right? And the amount is for -7, let me see. It is for I just lost it, -$75. Okay, why is it negative? Well, we'll figure that out in a minute, okay? So it's -$75, okay? What is this for? Now, what we can do here in the memo is we're actually going to say this is to fix your camera. So what does that even mean? So what I'm doing here is I am going to add fixtures to fix a broken camera, and then I'm going to resell it out to my store. So in this case, I'm going to go ahead and note this as parts to fix camera. Okay, I had to pay for parts to fix the camera. Okay, I paid $75. So then I'm gonna go straight to my items, and what's gonna happen here is I'm going to take one camera out, okay, and then I'm going to place it into another account. So in this case, first what I gotta do is I have a camera, SR32, right, and I'm going to take this away because I don't have this camera anymore. Okay, so there you go. -$450. So then where am I going to be placing this? I'm going to be placing this into another account called Camera 32 Refurbish, because that's true, right? Think about it in real life. If a customer decides to buy a product from you, right, and they return the product, are you going to put it back into your inventory where all your new inventory is? No, because you don't know what that customer did to that product. They could have used it so much to the point where they're like, oh my gosh, it's the return date. I'm going to return it now because I don't really need it. I got my job done, right? Some people are like that. Some people test it and then they're like, this camera's not for me. So they go back and they returned it. Now, can you sell a used product? Yes, you can. But you technically would have to discount it because it's been used. It's been tampered with, right? The box is open. All the battery has been used. The memory card has been used, etc., right? They touched the camera. So in this case, you would have to either rebox it and then put it in a separate account for refurbished items. Or you can have a title for used items, right? You could still sell them, but they're going to be obviously heavily discounted, okay? Because if you're trying to sell a used product, you shouldn't be able to sell it at its new price because of depreciation. Okay? And we'll talk about depreciation further on this chapter. Okay, so there you go. I am going to make some fixtures to this camera. And when I make the fixtures to this camera, I'm going to put it under my refurbished cameras. Okay, and I'm going to add one, quantity of one. So notice this, it's for $450. No, I'm going to mark this value to be $525, right? Because that's going to include the price of the camera plus the $75 that I used to apply to fix it. Okay, and again, your memo here tells you right here, description, right? In this case, you already know what you're doing here. Okay, let's see what it says here. Okay, no, right? You don't want to change the cost, right? Because this is what it costs you, and that's what you saved in the system. So in this case, I'm just overriding it, but I'm not saving to where it belongs. Okay, so in this case, there you go. Now notice this. I didn't add anything up here because if you remember, if you do all your transactions down below, it's going to equal it up at the top. Now in this case, right, I have negative 75 and I have a positive 75. Okay? And in this case, right, if you take a look into the details of it, this is a negative 450 and then this is a positive $525. So that would even out to be positive $75. So what do you notice here? You got a negative 75 expense and you have a positive $75 dollar item to equal out to zero. And this is what a $0 check does. It just transfers from one account to an item or an item to an account, vice versa, right? This one allows you to be able to do that. Okay? So again, what am I going to do? Fixtures for camera. I don't know, okay? Once everything looks good, I'm going to go ahead and save and close. Okay? So there you go. Now, that means in my items list, it's going to show that I have that refurbished camera. So again, we can run our report real quick for the items in inventory, right? And inventory stock status, okay, by item. Here, you're going to see here, you're going to have that refurbished camera, refurbished, right? You have one, okay? So that's what's important now. That's what it means to that every transaction affects your accounts. And check it out here too, because we designated it to be written into the journal entries because it's literally a $0 check. Here it appears right here, okay? And I can double click on it if I need to make any changes to it. Okay? Any questions in regards to writing a $0 check? Yes.
I know you told us the reason why we were not writing the journal entry, but would you tell us one more time why we're not doing the journal entry, but we are writing a $0 check?
Because
one sentence.
Okay, so journal entries only affect your accounts on your chart of accounts. Your $0 checks affects both accounts and items.
Oh, okay.
Okay? That's the huge difference. So can you write a journal entry for items? No.
No.
You can only use a $0 check for items.
Okay.
However, if it's just expenses, just accounts, you can use either one for both of them, for just accounts.
Okay.
Yes, second question?
No, that was it.
Oh, okay. I heard another ding. Okay. All right. So any other questions in regards to $0 checks? Okay. So, all right. Now, next section is something that could be considered a possibility for your company, right? It doesn't necessarily apply to everybody's company, right? And that is called bartering, okay? Now, what is bartering? Bartering allows you to trade services in place of another service. So, for example, right? hey, you, if you can take those pictures for me, I'll go ahead and in return, I will provide you service to do your retouching for you. That is an equal agreement where a transaction is being traded for equal circumstances, okay? Even if the prices are not equal, right? If you make this agreement terms, right, saying, I will do this job for you, I will take the pictures for you, in return, I will do you a favor and do your retouching for you for free. So there, in this case, right, it's a $0 transaction because you're trading a service for a service. Okay? Now, in this case, right, you're thinking, hold on. Isn't that illegal? It is not illegal if you write it down on paper, okay? It's only illegal if you do any other services that does not have a dollar value on it, okay? So in this case, it is a legal transaction to do some bartering. And that's why QuickBooks allows you to show you that, hey, if you are a service provider, you can trade services for other services and not have to pay a penny, okay? And this is where oftentimes, right, you'll see collaborations going on, right? You'll see companies working together with other companies because of this relationship of bartering. Hey, if you can do that service in return, I'll provide you that service. Okay, if you could provide me service, I provide you. So you scratch my back, I scratch yours, kind of ordeal. Okay. Now, of course, if you do go into bartering, make sure you do have a contract because you have to remember a verbal agreement may be valid, but it's not cold, concrete evidence and proof that an agreement was made. Right? It's always going to be verbal against actual written documentations, right? Which one you can always say he said, she said, right? In this case, so if you do go into bartering, you want to make sure you build a contract so they do not breach that contract and do service or don't provide you the service and then you do the service for them instead. So that's also one thing that you have to be also protecting yourself is that if you do go into these bartering terms is that you want to make sure that you protect yourself as well as that when you go into this agreement, whatever XYZ must be completed, then ABC will be provided. Got it? Okay, so let's go ahead and take a look for an example, right? Who did we do some bartering services for? Okay, let's see. So how are we going to do this now? Again, usually because a service is an item, you are going to actually be creating another $0 check. Okay, because these involve items and not so much of expenses, right? So in this case, remember you're going to make sure it's journal entries, okay? And you're going to change this to general journal 3, so it's already done for you. In this case, same date, January 31st, okay? Now, in this case, right, this is what this bartering services did for you, okay? So in this case, we had Wong and Son. So we did some bartering with one of our third-party 1099 contractors, Wong and Son. Okay? They usually provide a lot of other things such as our videographers, photographers, and so on and so forth. They provide a lot for us. And what we said is, let's do some bartering, trade-in service for a service, okay? We said that, hey, if you can go ahead and barter us, we will do some retouching services for headshots of your company. Okay? So in this case, right, you take the headshots of this person and we will go ahead and do the retouching services for you for a trade-in value. So in this case, you can make a note here that you're barter for retouching headshots. Headshots. Okay? So in this case, right? So since it's an item, right? We are going to be looking at an indoor photo session. So one indoor photo session. Indoor photo session. So this is for the headshots, right? Indoor photo session. Description. Okay, I want to see. Okay. So that said, this was linked to an income account. That's fine because again, we're using a $0 check anyway, so we're not generating income at all. Okay, we're trading a service value for an equal and opposite fair trade, I guess you could say. So in this case, we're gonna say we're gonna make it -1, okay, to make it -$95. Now that's the price of what one photo session is. But in this case, I'm going to make it even because we can overwrite this at any given time. I'm going to say it's $100 for this photo session, okay? $100. Then you made changes and you want to say no, okay? So in this case, I'm going to say I will give you a trade-in value, $100 worth of photo session. For the photo sessions, doesn't have to be 1 hour. It could be as long as you'd like, and I will provide you 2 hours of retouching services. So there you go. Retouching is what you're going to put in here. So retouching, right? And this is going to be 2 of them. Right? It says right here it's $50 each. So that means for $100. And there you go. Even -$100, right? They're going to do the indoor photo sessions and we're going to do the retouching services for them. Okay? And of course, you want to put your description, right? This is going to be professional headshots. Okay? And once everything looks good, right, if you want to designate a class, you can. Just know that this doesn't necessarily have to, because this is a vendor, it doesn't necessarily mean you need to assign a class because you're not selling to a customer. You're trading services with a vendor. So in this case, you don't actually have to assign it unless maybe this vendor works for a specific location. Okay? So in this case, I'm going to leave my classes blank. Once everything looks good, okay? All right, everything looks good. Oh, it does say that we're going to assign it to San Jose. Okay, once everything looks good, it's a $0 check. I can go ahead and confirm that this is done. Okay, so that means Wong and Son did some indoor photo sessions of taking headshots, right? And you provided them service to do the retouching, right? Fair trade, even dollar for dollar service. Okay? Any questions in regards to bartering? Yes.
So as long as both party feels it's a fair trade, that's all it matters, and that's how we enter these checks, right?
Yes.
Okay. And that's why we are adjusting the price to even out. We are getting $100 worth of service, and we're giving them $100 worth of service.
Yes, correct.
Okay.
Correct. Because the thing about bartering is it has to be an even trade. I trade you one service for my service, and it should be even dollar per dollar. Okay? Now, again, bartering doesn't always have to happen for any kind of company. If you have a really good relationship with your vendors, then that's how you build relationships once again, right? If you provide services for them and they provide services for you, then there you go. You have a great relationship and you guys can use each other for as much as you'd like, as long as the contract between you two does not get breached. Because again, if one of them faults on their part of their end of the service, anything can happen, right? So in this case, if for most cases, if you don't have anything that you can trade in for fair value, then again, bartering may not be a part of your company. But that's only if you do have something to offer that you can have a trade in value for, so you don't actually necessarily have to pay money. Okay? So that's the huge idea right there, is you're not spending any money to provide a service, right? You're trading it out so it's an even exchange. Okay? It doesn't have to apply to your company if it doesn't fit the criteria. Okay. All right. Okay. Next is going to be editing, voiding, and deleting transactions. So, for example, you have all means and all capabilities to edit a transaction at any given time, okay? There's no rules and regulations unless you do get parameters, or you get blocked off and have restrictions on editing or deleting transactions, okay? Usually, if you're the admin, you have full access to every single place. But if you're creating an account or a user, you can restrict them and allow them to do certain transactions, okay? So, but what I'm trying to show you is that because it's a computer system, right, you can edit anything at any given time. So for instance, right, let's take a look at an example where we need to edit an invoice, okay? So in this case, they do say if you click on the invoice here, you should be able to click the previous back button, and that should load in your last invoice, which is going to be to, Maria Cruz branch opening. Okay, so in this case, right, maybe someone was working on this and they forgot to add an extra service, or maybe Maria decides to call last minute and say, wait, before you bill me, can you tack on extra services? Okay, yes, we can do that, right? So in this case, right, they said, okay, before we bill them out, they wanted extra services from us. So in this case, we can add, delete, remove. We could do a lot of additions or subtractions and editing on this invoice itself. If Maria says, no, I don't want any premium photo packages, I want you to trade them all out for outdoor photo sessions, you can do so, okay? As long as whatever invoice that you're working on matches the invoice that you're actually sending out. Don't create another invoice if they're making changes to this particular service, okay? For any reason, let's say you already issued out their invoice and they say, hey, they call you and they say, I want to add more services. Then what you're going to do is you're just going to create another invoice and pass it along, okay? That's rule of thumb, is that if they always call you last minute, you're just going to issue them another invoice with the separate extra charges, okay? But if they catch you right before, or maybe they called you, you billed your invoice, and then they called you right back like 2 hours later, and they say, wait, I want to change my invoice. I want to have this, and this instead. Then, of course, you haven't billed them yet. So this is where you can go into their invoice and you're able to make the changes that are necessary to properly and go ahead and send out that invoice. Never create a new invoice with the same items, because then you're racking up and building her accounts receivable account when she actually doesn't owe you that much money, right? She only wanted this services. So do never create another invoice with the same exact items and you have the added items in there, okay? So you have to make a choice. You either create a new one with the new extra item, or you go back to the same invoice and you edit this invoice to add whatever extra services that Maria wants. So in this case, right, we're going to go ahead and add in an outdoor photo session. She wants 3 of them, okay? So that's what we're going to do. We're going to type in outdoor photo session, okay? And she wants 3 of them, okay? And then now everything looks good. And now here's the new amount. And we can go ahead and save and close, print it, and send it to her. And of course, you're going to get this window saying, are you sure you want to save these changes? And of course, yes, because you did this deliberately on purpose, right? She wanted extra services, so you edited her invoice, and now you got to reissue her that same exact invoice with the updated items on the list. Okay? Straightforward. You can edit any transactions at any given time. Now, remember from the very beginning when I've told you, okay, so in chapter 12, rule of thumb is never, ever, ever, ever delete a transaction. Reason being is because, again, a transaction is linked to so many different accounts. By you deleting it, it removes it off of it, and sometimes when you remove a transaction, it doesn't go back and undo every single transaction that was affected. Sometimes it does, sometimes it doesn't, and that's the thing about programs is it's very one way forward. I don't know if you understand that, but when you say yes, it will say yes, right? If you say no, it will say no. There is no in between. Okay? So if you delete a transaction, the QuickBooks doesn't know whether you said yes or no. Okay? So in this case, that's why it's so important that you never ever delete a transaction. However, if you want to, because you made a mistake and you don't no longer need that transaction, your best rule of thumb is to void the transaction. Yes, you can void a bill, you can void an invoice, you can void anything you want, right? Because if you're able to edit a invoice, then yes, then you have the capabilities to void a transaction as well as deleting them. So again, it's pretty straightforward. So if I go back to that invoice, right? And let's say Maria doesn't want the invoice anymore. She says, never mind. I have to call in sick, so I won't be able to show up for the event anyway. So I have to cancel. So what you can do is you go to edit here and you go ahead and void this transaction, okay? Okay, it says right here, new invoice, delete invoice. You never delete it, you void the invoice, okay? This will zero out her invoice. It will zero out that you sold the premium photo packages, and it will zero out the outdoor photo session. So what does voiding do? Voiding undoes. I don't know what the correct terminology is there, but it undoes the transaction, okay? So that's key that you understand that we're deleting, you just wipe it off of your system. But sometimes it doesn't wipe out everything, okay? So that's why rule of thumb 2 is, especially when you have you created an invoice, right? And you designated a number, right? Rule of thumb is if you have holes in your transaction list, then it's an automatic red flag saying that there's something fishy going on, right? If you have a missing check, right? If it goes from 6001, 6002, 6004, 6005, what happened to check number 6003? People are going to question it. Your tax accountant's going to question it. And what are you going to say? Oh, I voided the check. Well, why is there no record of you voiding that check? Right? Because then the questions of, are you trying to fraud the company? So that's where the rule of thumb here is, when there comes a situation where Maria does call you and they want to cancel this entire thing out, instead of writing it off as a bad debt, which we learned in chapter 3, right? She's canceling the whole thing in general, right? She's not going to accept it at all. So instead of charging her when the services has not been completed yet, this is prior, then your best bet to do is just to void the transaction to undo what you have created. Okay? And it leaves this trail mark behind. Okay? Saying that, yes, you did initially have the services ready for her, but she canceled last minute before the services was done. Okay? Where bad debt is when the service has already been completed and the person did not pay. So there's a huge difference. Okay? All right. Now, when you reach the conclusion that you are entering all of your transactions day after day after day after day, right? And you come across looking at your QuickBooks and seeing, well, I've been entering transactions for a whole year now, okay? My QuickBooks the file is getting heavier because every time I insert data into this file, right, it's adding more and more to the actual file. So at this point, right, the file is probably really huge because, again, a year ago, you probably started out with only 5 customers. Fast forward now, you probably have 100 customers. Now, with that idea, right, rule of thumb here is that you're not, if you want to, it's possible, of course, you can use QuickBooks and only one file and have it for the rest of your business career. Okay? So you can have the file that's 5 years old, 6 years old, 10 years old even, right? And all you do is just keep adding. Now, the problem with that is that the more you add more details to the files, right? We mentioned this, it gets bigger and bigger and bigger. Now, what happens when every time you load that file? It will take forever to load, and it might not move as fast because it's trying to open up all of that memory that it has, like opening up every single account that exists with all the transactions that you have put in there. So what the main purposes I'm talking about is that you can create a backup, right? So you create a copy of it. And what you can do is at the end of the accounting period, so let's say it's at the end of the year, you can delete all the transactions, but save all of your lists, your items, and everything in there. Okay? And this is and basically when you start your file over again for the new accounting period, you start off fresh. You can even tailor the actual time frames. So you wouldn't technically lose all of your information, right? Because if you, let's say I'm doing this from January all the way to December, right? And I started adding all of my transactions for January for the next year, right? But if I cap it to say I want to delete all my transactions from January to December, that means it will get rid of all of those transactions, but still keep your transactions that you're currently working on. And of course, all your account balances will be reflected to whatever point that you stop at. Okay? And we call that condensing the data, right? So this case, what we're doing is we're wiping the file clean of all the transactions. However, the people still exist. Okay? My forms still exist. my checking account still exists, okay? And I can just go ahead and start my transactions on a new accounting period starting on the date that you want to start on. So in this case, right, it makes your file condense, it shrinks it, right, because all the files that you had for that whole entire year gets wiped out, and then it shrinks your file to much smaller and much more easier to open up the file every single time. Now, of course, before doing that, your best bet is you should always back up the file for any reason that you need a copy. And you will need a copy because you're going to send one to the tax accountant. So therefore, you have to have the actual copy of all your transactions that you had from that year. Okay? And that's why it's so important to back up your files too, because they essentially are copies of your actual QuickBooks file. So once that happens, right, how do I go ahead and delete it? If I don't want any of my transactions that happened from 5 years prior all the way up to now, I want to know what's current as of the year 2022. Then how do I do that? Well, if you go up to the File menu, you're going to go to Utilities, and you have this Condense Data. So what it does is, once again, it deletes all the transactions from a certain time period, because you get to select the time period, and it deletes all the transactions, but it keeps your people, your list of items, your preferences and settings. All of that's going to stay the same. The only difference is entering in the transactions, which is going to be entering all your bills, entering all the payments, entering all the sales receipts, and the recorded deposits. All of that's going to be cleared out. Okay? So any questions in regards to that way to be deleting those to be deleting all of those transactions, right? Any questions in regards to that option? Okay. Think of it like a spreadsheet. The more you keep adding to a spreadsheet, right? Essentially, it takes longer to load, right? But if you decided to just open up a brand new spreadsheet, right, and create a new file from that while keeping the format all the same, how much more easier it is for you to just continue using the new file form than continuing the old one, which is getting too much information and becoming slower, and it's much more bigger in size, right? The more bigger the file is, the less smooth it is to enter in transactions. Okay, so if there's no questions in regards to that, let's talk about the next section here, okay? And then we'll go on a break. So, okay. So the next section is going to be talking about memorizing transactions, right? So if you guys remember, there was this one time where we were talking about entering in the bill, and every time we had to enter it in, we would have to put in all the same information and basically issue another bill after another bill after another bill with the same exact information, right? I think it was batch invoicing, right? What's the purpose of creating the same exact invoice for this group of people, right? And making changes to each and every single one of them because of their terms and their invoice number, right? Wouldn't it be easier if you just created one form, right? And be able to issue it to them every single month? Absolutely. Okay? And here it is. This is going to be creating memorized transactions, okay? So let's take a look here. So first thing you got to do is you have to actually create whatever template that you're creating, right? So in this case, we're going to be entering in a bill, Okay? And we're going to say this is from this bill is going to be from Sinclair Insurance. Okay? So we're going to be looking at insurance. Sinclair Insurance. There it is. Okay? Now the date I'm going to say is going to be January 31st of 2022. Okay? Let's just keep that date. Okay? It's going to be net 30, so that means every time you receive a bill from Sinclair Insurance, it's going to be due in 30 days. Okay? Now, in this case, what are we going to be expecting from in Sinclair Insurance? Now, usually, right, we know for a fact that there must be some insurance involved with Sinclair Insurance, right? Makes sense, right? We are going to be making an insurance expense for $600. Okay? So, insurance expense, there it is, insurance expense. And it is for $600. Okay? And what's the memo for? Maybe you're buying insurance to protect a certain store location. Okay? So in this case, Sinclair Insurance, right? I'm going to keep the date because the date could be relative. All right? And what this is going to be, I'm going to say insurance expense for San Jose store. Okay, let's just say it. Okay, and of course I'm going to designate that to the store San Jose. Okay, now let's take a look at this. Everything looks good, right? What about my reference number? Now that's going to be again on your bill, right? In this case it's based on your bill. It's not based on anything other than what you see on your bill. Okay? So in this case, this billing number, I'm going to go ahead and make it up. Let's call this 12345. Okay? For $600. Now, once I am done with this bill, instead of saving it, right? At the very top of this window, you have the option to memorize. Okay? And when I click on memorize, what does this option tell me? What am I going to memorize this as? I'm going to memorize this as monthly insurance. Okay? San Jose, SJ, okay? Do I want to add a reminder list for it? So that means flag me every time I get a reminder. Or do I not want to remind me? Or do I want to automate transaction entry? In this case, that means the next time I want to enter in a bill from Sinclair, right? Because it's a monthly insurance. Then I'm going to go ahead and actually click on automate the transaction. Okay? Now in this case, how often do you receive this bill? In this case, I receive it monthly. Okay? And in this case, when's the next date? Well, in this case, right, if my first one's on January 31st, right, my next one's going to be February 28th. Okay? And again, how many numbers are remaining? In this case, I've received my January one, right? If I bought the insurance for the whole year, I have 11 more bills to be receiving, okay? And again, days in advance to be entered, I said 0. So whatever day that I receive it, right? Because once I receive it, I have 30 days to pay it. So in this case, I don't need to worry, okay? Now in this case, the book does say it's the 15, but that's okay. Again, time is relative. So in this case, there you go. Okay? And I'm going to click OK. Right? And if you heard this, it just took a screenshot of this exact bill. Okay? And what I'm going to do is I'm now going to finally save and close. Okay? and there I get my beep of approval. So that was my very first bill. Now I'm going to show you what happens now. Let's say I go ahead and click on enter a bill again, okay? And I decide to type in Sinclair once again. What's going to happen is it fills in all my information except I have to change the date myself. I have to enter in the amount, and I have to enter in the billing number. Obviously, that one's going to be found on the billing list. But in this case, it looks like I have to do the transaction all over again. And that's where you don't go to the enter bills, okay? Where do you go to re-enter in a new bill for February? Well, I'm definitely not going to go through the enter bills, okay? So I'm going to say no. Where am I going to find that? I'm going to find it under my list, okay? Under memorized transactions. So if I go ahead and click on memorized transactions, boom, I have the monthly insurance for San Jose, okay? And what I'm going to do here is I'm going to double tap on it. And there you go. Boom. It created me the exact transactions with the date that I need. So right here, it says February 28th. And it says the insurance is due for $600. And where is it to? San Jose. All right. And all I have to do is just enter in the bill number. So in this case, 1, 2, 3, 4, 5, 7. Okay. And then because I automated the transaction, right, I saved exactly what it should look like. The only difference is it automatically assigned the next date or the next billing cycle, right? So in this case, I can go ahead and click save. Because you also indicated that there were 11 bills left, right? Every time you click on this, double click on it, it will create the next bill for the next month. So in this case, it's the 21st, right? Because I said every 30 days. So, or I said every, no, in this case, it says the 31st. Okay, so it already recognized that I'm going to be receiving the bill at the end of the month. And look at that. It is now same thing. $600, okay, for the month of March. Okay, and I can save and close. Now, let's say sometime down the line, let's say April, due to whatever circumstances, maybe you had something happen to your insurance, right? Maybe someone broke into the San Jose store, right? And they decided to up your insurance. How do I make changes to that? Well, I can do that by going to the bill. So I'm entering my fourth bill here for April, right? I can say, well, now because of that insurance, right, and I end up, my insurance policy went up, it increased, right? Maybe it increased by $800. I can type in 800, but what I have to do here is, how do I save this? So then the next time I visit this bill, it's going to be 800 this time. I actually have to re-memorize it, okay? So I go to items here, I have to re-memorize it. So in this case, it says monthly insurance is already in the memorized reports, okay? And if guys, transaction list, would you like to replace? Yes. So once I replace it, right? So that means the next time I go ahead and double click on that memorized transaction, boom. Now it's got May's date on there, and it has the insurance policy increased by $200. So that is the beauty of memorized transactions, and this is probably more preferable to be issuing that monthly payment, right? Because yes, you can memorize invoices. So if you know that you're going to be billing this person every single month, instead of going there manually entering all those transactions in, right? You can simply go to memorize transactions and issue that invoice for every single month with the correct dates assigned, right? All you have to do is assign the invoice number, and it fills in all the transactions for you automatically. So, any questions in memorized reports or memorized transactions? Yes.
Okay, so just out of curiosity, then, I see that if we use the same customer or vendor,
Mm-hmm.
we can memorize it.
Yes.
But you would not want to do it like if it was a subscription type thing because every bill or invoice that goes out is for a different person, even though it looks the same.
So yes, so you would have to make maybe, so let's say that group of people, right? Jerry, Bob, and Tim. You would have to create three separate memorized um, invoices or memorized transactions to issue each and every single one of them. So yes, you would have to create a separate one designated for that particular person.
Okay, so in your opinion, then, just to be curious with it, is it faster if you had batch invoices to use batch invoice or to use a template to do the invoices each time?
So remember from when we did this, right? When I clicked on enter bills, I had to fill out everything from scratch. So if I go through batch invoicing, I still have to fill everything from scratch. Even though I selected the group of people, right? The people are assigned that are assigned, right? I still had to fill out what I'm going to be invoicing them for.
Yeah, that's right. I
Where
forgot about
this one,
the bill
right?
was batch.
I just double click on it, boom, it pops the invoice with all the in detailed information already filled in for me. All I have to do is assign the invoice number and click save and close and print and issue out that invoice. So, as a personal preference, I would say this is much more easier because I don't have to do anything except for entering in the invoice number. It's
Okay, so then
automatic.
let me ask you this then. Say we had three insurance companies
Mhm.
that we paid them all the same thing. You could memorize the first one, then just go in and change the name on, pull that up, change the name, and do another one, memorize it under a different name, or you have to fill out each one and memorize for the first time.
I mean, that's also you can do that, but that's also messy just because remember, if you do not save it every single time,
Right.
then
Okay.
yes, you can. That's app you can. Absolutely you can. But remember, because I assigned how many number of bills I'm going to be receiving, that
Right.
is where it's going to keep changing. So you're going to have to go back and change that. Now, I can
Okay.
say I designate only one time payment. And yes, I can use that as a template if I wanted to do so to be able to just produce my bills a lot quicker. Yes, I can do that. But the only problem is if you're not constantly saving it, you're just going to have to make those minor changes to those areas and you might make a mistake.
Right.
It might be
Okay.
a higher
Right.
chance of mistakes because you might be like, okay, not this person, it's this person now, but their terms are different, right? Not this
Okay.
person, not this date, right? So,
Gotcha.
yes, you
Thank you.
can do it though. It's not impossible or it's not wrong. You can use it that way as well. It's just I would not recommend it, just because
Okay. Thank you.
the extra things that we assigned to that particular bill will affect your end result. Okay. All right. Any other questions? So again, for any reason you need to modify this, right? It's straightforward. You're going to right click and edit, or you can go down to the bottom again, memorize transaction, and be able to edit this memorized transaction. And what you do here is this is where you're making changes. Okay, so do you want to automate them? Do you want to put it on the reminders list? So in this case, best one to use is the automation. Okay, did the statement date change? And is it monthly or what is it, right? So again, this is where you can edit and modify. Maybe my insurance, right? Even though they issue it with a new policy, maybe I have a new date. I have a new due date now, a new billing cycle date. They started changing this plan for me to be on the 15th. So any reasons that you have, or maybe they shorten up this, right? It's no longer 11, and there's only 6 left. Or maybe that because of the policy, because of the reasons, because of the whatever insurance decided to spike up. Maybe you're deciding, okay, maybe I'm only going to make a couple more payments up and I'm going to call another insurance company. For any reasons that you need to edit or modify this, you do it right here by just right-clicking or going down to the bottom and editing, okay? And again, let's say you are editing the form like I just showed you. If you want to save those changes, just click the memorize button again at the very top of the window and it will save your changes. Okay, but this is just saving the changes, like how many number of payments you have left, how frequent do you get these bills, and etc. etc. Okay. All right. Any other questions? Okay. All right, we're gonna stop here. Okay, and then we will continue.